Hello everyone, this is Grace here. In this video, we'll be discussing GST problems from the chapter 3, time, place and value of supply. So we will be discussing value of supply problems. So calculation of transaction value and GST payable. Calculate GST payable by registered dealer in Bangalore from the following details. So they've given sales made to a registered dealer in Mysore 8 lakh at 18% GST, sales made to registered dealer in Bangalore 4 lakh at 18% GST, goods transferred to branch in Bangalore 1,25,000 at 18% GST. The following are the returns made by a dealer. So goods returned from the dealer of Mysore is rupees 15,000 within 50 days. Goods returned from dealer of Mangalore 25,000 after 7 months. Good returned from Bangalore branch 5,000 after 3 months. So in this problem we will calculate first the transaction value. So computation of transaction value. So what is the sales made? So the sales is made to 3 different places. So the sales is made to 3 different registered dealers, that is in Mysore and Bangalore, and which is also transferred to a branch in Bangalore. So we will take up the sales made to the registered dealer in Mysore is 8 lakh, then sales made to registered dealer in Bangalore is 4 lakh, transfer of goods to a branch in Bangalore is 1,25,000. So the total transaction or the total sales value is, we'll add up 8 lakh plus 4 lakh plus 1,25,000, which will give us 13,25,000. Now with this total we will minus if there is any returns or any items as per the format what we have learned. What are the items to be minus will be my deducting here. So any expenses which is incurred by the supplier and he is charging it to the purchaser, so any value of that will be deducted here. So now goods returned from dealer of Mysore. So from the sales what you have made, the total income what you are getting is 13,25,000. So when it is returning to you, you will minus it. So we are minusing from the totals. So now goods returned from dealer of Mysore within 50 days. So anything which is returned within 6 months only can be considered for calculation. So if it is crossing 6 months, that such returns or such transactions will not be considered in calculation, because it is assumed that the entity has more than one. I'm sorry. Goods returned can be deducted from sales if goods are returned within 6 months from the end of the financial year or date of filing annual return, whichever is earlier. So they have stated in this note that the second point, the goods which is returned should be done within 6 months or at the end of the financial year or date of filing annual return, whichever is early. So this is a rule which has been fixed. So anything which is returned should be returned within 6 months from the date of sales which is made, because there is a item to be noted that, because date of filing will be done as soon as possible, that is whichever day is earlier. So before the date of filing of that particular GST return, the good should be returned. So if the GST return is filed before 6 months, as per the question, if it is given that they have clearly stated it should be within 6 months or the date of filing the annual return. So whichever is earlier. So if before whichever is earlier should be considered for the number of months which is to be taken for returning the goods. So it is not fixed that it is 6 months. We also should look into the date of filing. If the date of filing is being done within 6 months or 3 months itself, then 3 months will be considered as the good should be returned within 3 months. So whichever is earlier, we will be considering. So if no information regarding date of filing is given, then we will consider it as 6 months. This is done usually once the return is filed, then GST cannot be changed. So that is the limitation what we have. So GST what you have paid and the input tax credit benefits you would have enjoyed from it. So input tax credit benefits in the sense, from the tax which you have paid, okay, for example, you are the person who is liable to pay tax, so you would have paid the tax when you are purchasing the goods, and when you are selling the goods to the other person, you will collect tax from him. So you have paid and you have collected, so you will adjust, you will find that only the difference you will pay up. So like that, the input tax credit benefit is you will not pay the full tax. So the difference from your input and from your output, that is how much you have paid minus how much you have received, so that difference only you will be paying as tax. So that tax will be input tax credit benefits will be adjusted and you will pay to the department. So once it is paid, it is closed, you can't do any revised corrections. So that is why any returns which is to be made before the date of filing or within 6 months, if it is made after that, then it cannot be considered. Then it cannot be considered for calculation of GST, because already the benefits are enjoyed from that sales. So that is why it is stated 6 months or date of filing, whichever is earlier. So now we will consider 6 months because no date is given here regarding date of filing. So the goods are returned from a dealer of Mysore at rupees 15,000 within 50 days. So it is before 6 months. So we will consider this goods which is returned by the dealer to in the calculation of transaction value. So less goods with returned within 50 days, 15,000. Next, goods returned from a dealer of Mangalore 25,000 after 7 months. So it is crossing 6 months. So you will not be considering that. So goods returned after 7 months will be nil. So goods returned from Bangalore branch 5,000 after 3 months. So it is returned from Bangalore branch, which is 5,000 after 3 months. So it is within 6 months. So you can consider that goods returned after 3 months 5,000. So the total value of goods what you have returned is 15 plus 5, which is 20,000. So from the total sales 13,25,000, you will minus the goods which is returned value 20,000. So that exact transaction value is 13,05,000. So now on this, they have asked us to charge GST. So the GST is 18% for all the sales which is made. So all the sales which is made is within the state, so within the Karnataka state. So Mysore, Mangalore and Bangalore is within the state. So CGST and SGST will be charged. So as it is 18%, we will divide that to central and state. So 18 divided by 2, 9. So state will take 9% and central will be taking 9%. So SGST payable is 13,05,000 into 9% will give you 1,17,450, and CGST 13,05,000 into 9% will give you 1,17,450. So the total is 2,34,900. So it is assumed that the entity has more than one registration in one state, that is Karnataka. Therefore, GST is taxable on branch transfer. So GST will be taxable on the branch, that is Bangalore branch. So on that address the GST will be charged. So the next is calculation of GST payable in case of composite supply. So Mr. Ratul Roy, a dealer in Bangalore, entered a contract with the supplier in Mysore to deliver a machinery along with essential accessories. From the information determine the total amount of GST payable under Section 15 of GST Act 2017. So they've given here particulars price of the machinery excluding GST. So this price of this machinery is excluding GST, which is 10 lakh. Installation expenses charged separately in invoice. So installation expenses are to be charged. Then insurance charges charged separately in invoice. Warranty charges are also charged separately in invoice. Transportation charges also to be charged separately in the invoice. Then other information, cash discount 5% on price of machinery was allowed as per the term of contract. Since full payment was received before dispatch of machinery, accessories were supplied along with machinery for rupees 20,000, and accessories are charged for tax at a rate of 5%. GST rate on machinery is 18%. So now let us get into the solution and we will clearly understand how it works. So now computation of transaction value and GST payable, particulars and amount. So price of the machinery, which is excluding GST, so we can take directly the amount, which is 10 lakh. Then we will add all the expenses which is incurred along with the asset what we have purchased. Installation expenses should be added, which is 50,000. Insurance charges, which is 35,000. Warranty charges, which is 28,000. Transport charges, which is 5,000. So all these expenses which are incurred for the goods which has been supplied. So as Mr. Ratul Roy A dealer in Bangalore entered a contract with a supplier in Mysore to deliver a machinery along with essential accessories. So he is delivering goods to a person who is located in Mysore along with these accessories and along with the accessories. So services, all the services which has been rendered is added up. So what are the other accessories which has been rendered is, so in the other information we have information regarding it. Cash discount 5% on price of machinery is given. So they have given discount here. So as we know, discounts will be minus at the end before finding out the total transaction value. Then they have given here cash discount 5% on price of machinery were allowed as per terms of contract since full payment was received before dispatch of machinery. Yes. So why they give cash discount? Cash discount is usually given to the by the supplier to the buyer when the payment what he is supposed to pay, that is when the buyer pays payment before the due date of the invoice, then discount will be given to him. Why is supplier giving this discount to the buyer? Because he is paying the money before the due date. So due date is the date on which the payment should be settled. The payment is not made by the buyer on the due date, then extra interest can be charged by the supplier for the delay payment. If he is giving it earlier before the due date, then he can get or he might get benefit of discount. But supplier will feel happy that he is receiving his money earlier than the due date, so there are chances where the supplier can give discounts. So in the same case, since he's made the full payment instead of making it in installments before the machinery is dispatched, the supplier is giving 5% discount to him on the machinery, so that will be minus on the total value of the asset. So now as we have added up, then we have the second question. Accessories were supplied, that is essential along with machinery. So which is essential to be supplied along with the machinery for 20,000, and accessories are charged at a tax for a tax at a rate of 5%. Okay, how much is the accessories? Accessories also to be added to find out what is the total value of the asset. So the accessory is 20,000. So what is the total expenses which is incurred? 50,000 plus 35 plus 28,000 plus 5,000 plus 20,000, which will give us 1,38,000. So this 1,38,000 will be added with the price of machinery, which is 10 lakh. So 10 lakh plus 1,38,000 will give us 11,38,000 is the total. So with this, as we have availed discount, which is 5%, so 5% on the price of the machinery. So price of machinery, which is 10,000, on 10,000 we will provide the discount value. So the discount value is 5%, so 10 lakh into 5%, which will give us 50,000. So you can ask me a question, why is it only on 10 lakh? So this is the price of the machinery which is to be agreed upon for purchasing. So these are the expenses which are incurred after the asset has been ready for sale. So these are the additional expenses which is incurred. So this just discount is to be charged on the exact value of the goods. So this additional expenses will not be included for charging the discounts. So 10 lakh into 5%, which will give us 50,000. So we would have followed the same method till all the problems what we have solved till now. Yes, till the problems what we have solved till now will have discount value directly given in the question. So only in this problem we have the discount value which is given in the form of percentage. So this problem is slight different from the other problems. So as the amount was directly given, we were taking the amount directly. As 5% is given here, we will be charging on the initial price of the machinery, which is 10 lakh. So 10 lakh into 5%, which will give us 50,000. Please do remember while solving these kind of problems. So now after minusing the discount, so the total invoice value is 10,88,000 is the total invoice value. So on this GST will be charged. So now we have on the principal good, as we know composite supply is where along with the principal other with as a subsidiary goods also will be supplied. So it is composite supply. So along with the principal, the other alternative goods also will be supplied along with the principal goods. So when in such cases we should always take the percentage of the principal goods. So now as your asset is machinery is supplied, along with that the spare parts which is required for for the machinery or necessary accessories which is required or which is essential for the machinery to smoother running would be supplied. So now the GST rate for both can be different. For spare parts or for the accessories it can be different, and for the machinery it can be different. So when such composite supply is made, the principal item, so for what this accessories is given for buying machinery, so such on GST of such kind of goods, that is principal supply goods, should be taken into consideration. So what is the principal supply price of machinery? So what is the GST of GST or the rate of machinery as it is given in the question? 18%. So we will be taking 18% on the total transaction value. So as this goods are supplied by the supplier who is there in Bangalore to the supplier in my I'm sorry, a dealer in Bangalore entered a contract with the supplier in Mysore. So a dealer is in Bangalore and the supplier is in Mysore. So both the parties are in Karnataka. So it is SGST and CGST. So what is the percentage? 18%. So we will divide it into 2, which is 9% will be given to state and the remaining 9 will be given to the central. So CGST, what is the total transaction value? That is your value of supply, 10,88,000 into 9%, which will give us 97,920, and SGST 10,88,000 into 9%, 97,920 is the total GST payable. So the total GST payable is, add both the CGST and SGST, which is 1,95,840. So what the note which is given here, in case of composite supply, GST rate applicable for principal supply, that is machinery, 18% should be considered. So the next problem what we are going to discuss is compute the transaction value of goods and IGST payable for the following information. Wholesale price of the product sold to Gujarat from a dealer in Bangalore. So including GST 12%, which is 2,10,000. So till now, whatever the questions we have solved, the amount or the sale value will not have GST in it. It will always be excluding GST. But in this question, we have the sale price which is including GST. So we have solved this kind of problem initially, where we know that this GST is for 112%. So we need to find out for 100% what is the value. So it is nothing but cross multiplication. So when including GST, so the sale price when it has including GST, we'll assume that selling price to be 100 plus GST rate, which is 112%. So when this 2,10,000 is for 112%, because GST is 12%, then for 100% how much is it? We will cross multiply. So then they have given the following items are not included in the price. Secondary packaging cost 10,800, cost of special packing 16,200, cost of returnable packing 8,000, freight and insurance 7,500, trade discounts 20,000. So now computation of transaction value and GST payable. Particulars, selling price 2,10,000. So now we will calculate the transaction value. We know the selling price is 2,10,000, which is including of GST 12%. So we will find out what is excluding GST, because we are going to find out the transaction value and then we will add up the GST to it. So sale price for 2,10,000 is for 112%. Then for 100% how much is it? Just when you work out you will understand. Just write in a notebook, for 112% if it is 2,10,000, then for 100% hyphen question mark. Now you will have for 112% if it is 2,10,000, and for 100% it is question mark. Now use in a cross multiplication. So it will be 100 into 2,10,000 divided by 112. So that is what the calculation what is done here, which will give you 1,87,500. So now we will add up the items which is not included in the price, which is secondary packaging, cost of special packing, cost of returnable packing. So here in this calculation, so the cost of returnable packing will not be taken up here, because I've already told why it will not be included, because it is the packing which is done for the goods which is returned. So in the selling price, only the expenses which is incurred with the selling of the goods will be added up. So any goods which is returnable, or the cost which is spent on returnable goods, will not be added up with the selling price. So secondary packaging, cost of special packaging, and freight insurance and trade discounts of 20,000. So as usual practice, trade discounts will be minus from the total. So now we will add up secondary packaging 10,800, cost of special packing 16,200, then freight and insurance 7,500. So the total will be 34,500. So with the selling price 1,87,500, we will add up 34,500, where we'll be getting 2,22,000. So this is the total. So with this total, we will minus the trade discount. So what is your trade discount in the question is? The trade discount in your question is, which is 20,000. So we will minus 20,000. So 2,22,000 minus 20,000 will give us 2,02,000 as your transaction value. So your transaction value is 2,22,000. So the GST rate what is given here is 12%. So in the question itself they have stated it is IGST payable. So we will add up we will charge GST on it. As it is IGST, it is only one single GST. If it is interstate, so we will be charging IGST to it. So what is your total transaction value? 2,02,000. So 2,02,000 into 12%. IGST will not be distributed to anyone. It will be directly charged to the central. So 2,02,000 into 12% will give us 24,240. So note, IGST is applicable because the product is sold from a dealer in one state to another state. Transaction value does not include GST, sales tax and other taxes. So here they have given the transaction value, which is the exact value of the goods and the other expenses. It will not include GST. So as they have given the selling price including GST, we will find out what is the selling price excluding GST first, and then we will add up all the expenses. We will minus the discount. We will find out the transaction value. Then GST will be calculated. So your transaction value does not include GST, sales tax and other taxes. So now let us get into the next problem. So under illustration 28, so here computation of transaction value and IGST for goods. XYZ of Chennai agreed to sell an electronic motor on which the rate of GST applicable is 12%. So now XYZ of Chennai, so they agreed to sell an electronic motor where the rate applicable is 12% to ABC. So XYZ is selling to ABC of Bangalore. So it is Chennai and Bangalore. So it is interstate. So where IGST will be charged. So of Bangalore for 7,500 on ex-factory basis. So other particulars are transportation and transit insurance were arranged by XYZ Limited. This was at the request of ABC Limited and amounted to for rupees 625 and rupees 750 respectively, which were charged separately. A discount of rupees 500 was given to ABC Limited on the agreed price on payment of an advance of rupees 1,250 with the other. Ignore national interest on advance. Interest of rupees 400 was charged from DEF Limited as it failed to make the payment within 30 days. Packing charges of motor amounted to rupees 650. The expenditure incurred by ABC Limited towards free towards free after sale services during warranty period comes to rupees 250 per motor. So compute IGST payable. So now here they have given 7,500 is the value of the selling price of the motor. Then other information is transportation and transit insurance. The first point is transportation and transit insurance were arranged by XYZ. So the supplier has arranged it. So where it was amounted to 625 and 750. So we will be adding this along with the sale price, which is the price of the goods which has been offered. Next, we have discount. So the discount here is 500. So why was this discount given is for advance payment. So as they have made advance payment for the order, a discount of 500 rupees was given. So what we are going to do here is we need to understand any discount which is given on the payment of any advances for an order which has been accepted. It will not accepted will not be considered as discount. It will not be it will not be deducted from the sale price. Instead, it will not be deducted from the total value of the asset. Instead, it will be added up. So only discount which is charged as per the agreement, as per the normal practice, will be allowed for deduction. Otherwise, such discounts will be added up with the offered price or sale price. So now we have this discount will be added up, which is 500. Next, interest of 400 was charged from DEF as it failed to make payment within 30 days. So they are supposed to pay to DEF rupees. I'm sorry, they are supposed to make payment to DEF of DF. So as payment was delayed, 400 rupees was charged. So packing charges of the motor amount was rupees 650. So 650 is for packing charges. So we will be considering that. Then expenditure incurred by ABC Limited towards after after sale service during warranty period comes to 250 per motor. So this 250 also will be considered. So the interest of rupees 400 was charged from DEF. So DEF is not the party which is involved with purchase and sales. So as it is not involved with XYZ and ABC, so this person is the third party. So his transaction or his interest what is charged will not be included in this problem. So this 400 will not be will not be considered in the computation of transaction value of GST, as it is not related to the transaction or the dealing which has been made between XYZ and ABC. So DF is the third person, so the interest charged from him will not be applicable here. So let us get into the solution. Computation of transaction value and GST payable. Offered price is 7,500 as per the question. Then we will add up transportation and transit insurance, which is 625 and 750. So 625 and 750, which is transportation charges and transit insurance. Then discount, as I've explained, it will not be considered as deduction. We will add up it because it is not given on the normal practice, it is given on the advance. So we will add up the discount of 500. Next, this interest will not be interest of rupees 400 charged from DF will not be considered because this person is nowhere involved with the trade which is happening between XYZ and ABC. So packing charges, which is 650 on motor. So this is the expense which is incurred on the motor. So we will add up packing charges 650. Then the expenditures which is included after the sale, that is during warranty period, which comes to 250. So for certain services which has been rendered, certain expenses are incurred, which is rupees 250 for per motor. So we will add up that, which is free after sale services 250. So now we will add up our total expenses which is incurred, which is 500, 650, 250, 625 and 750, where we'll be getting 2,775. So now we will add up the offered price, which is 7,500 plus 2,775, which will give us 10,275. So the IGST is 1,233. So note, transportation and transit insurance are included items are the included items even if it is charged separately. So now your transportation and transit items are to be included with the offered price because it is the expenses which is incurred by the supplier. So it should be charged to find out what is the total transaction value. Next, packing charges any discount provided as per normal practice is allowed as deduction, but if it is given as payment of an advance received with the order, hence to be added back. So as I've explained, so the about the discounts. Then packing charges free after service is includable item. So packing expenses also to be included. Interest on delayed payment is not a part of sale price. Yes, it is not the part of the selling price here, as it is interest which is charged on the delay payment. So it is not the expenses which is to be incurred with the selling price of the selling price or the agreed price at which the asset is sold. Then it ends excluded here if the buyer fails to pay within 30 days as per the agreement, then it is chargeable to GST as and when supplier raises the invoice or receive the payment for the same. So these are the notes which is to be remembered while solving the problem. Why we have included certain items and why we have not included certain items. So the next problem what we are going to discuss is, so next illustration is illustration 29. In Hyderabad entered a contract with a supplier in Tumkur to deliver machinery along with essential accessories. From the information, determine the total amount of GST payable under Section 15 of CGST Act 2017. Now they've given us particulars and amount. So price of machinery excluding taxes and duties. So this price does not include GST. So we can take this amount directly. If it is including GST, then we need to do cross multiplication. So now as this is excluding, we will be taking this as the price of the machinery directly. Next, installation and erection expenses charged separately in invoice is 10,000. So these are the expenses which is to be added with the price of machinery. So now what is the price of machinery? 3,15,000. With that we will add installation expenses 10,000, packing charges both for primary and secondary goods which is delivered is 7,500. Then design and engineering charges paid by the buyer, so that is also an expenses which is incurred 4,000. Cost of material supplied by buyer free of charge 1,000. Then pre-delivery inspection charges 500. Loading and handling charges within the factory which is 600. So 10,000 plus 7,500 plus 4,000 plus 1,000 plus 500 and plus 600. So the total will be taken here. And also they've given in an adjustment stating cash discount of 2% on the price of the machinery was allowed as per the contract since full payment was received before dispatch of machinery. Okay, this discount was availed or which is given to by the supplier to the buyer for the full payment which was received before the due date or before the goods machinery was released or dispatched. So this discount will be considered for as deduction, so we will minus this discount. Then the next point states bought out accessories supplied along with machinery valued at rupees 2,500 which was necessary for the working of machinery. So this accessory which is supplied is very essential for the which is necessary as well as essential for the working of machinery. So as it is essential, it is a composite supply. So if you would have listened to the video of what is composite supply, a composite supply states which is supplied made by the taxable person to a recipient consisting of two or more taxable supplies of goods or services or any combination thereof which has naturally bundled and supplied in conjunction with each other in the ordinary course, one of which is a principal supply. So when we speak about composite supply, along with the primary goods, the secondary goods is also, that is along with principal, the secondary goods is also supplied so that it is interrelated. So it is for the benefit of the primary goods. So for example, when the goods are transported, along with transportation, insurance is given. Why is insurance given? For the goods to be safeguarded. In the same way it is necessary for the primary supply to be satisfied, the secondary supply which is allowed, which is mandatory for the supporting of the primary supply. So when such supplies are made, it is called composite supply. So here clearly in the question we have stated bought out accessories supplied along with machinery valued of rupees 2,500 which was necessary for the working of the machinery. So is it important for the machinery to work? Yes. So then it is called as composite supply which is bundled together. So when you're availing primary, you should also avail the secondary, because to work for the primary to work, the secondary should support. So when such supply is made, it is called as composite supply. So why I'm explaining this is you need to know what is composite supply and mixed supply. So when it is composite supply, we will be taking the percentage of the principal. When two supplies are made, the percentage will be different for both the supplies, but we will be taking the percentage of the principal for calculating GST. So when it is mixed supply, we will be taking which supplies rate is higher, that rate will be taking for calculation of GST amount. So in this problem, we identified that it is composite supply. So we will be taking the principal supplies rate to calculate GST amount. So now they've given here these bought out goods are charged for a tax at a rate of 5%. So this accessories is charged at 5%. Then so what is the value of the machinery? That is important for you to know, because this is composite supply where principal GST rate will be applicable. So they've given GST rate is 18% for the machinery. Make suitable assumption as required and provided brief reasons. So now we have taken the price of the machinery as it is stated in the question, which is excluding GST. So we will take 3,15,000. We will add all the expenses which is incurred. So there is no expenses based on returnable goods. So we will take every expenses. So 10,000 plus 7,500 plus 4,000 plus 1,000 plus 500 plus 600, and this 2,500 is the accessory value of the machinery, accessory value which has been provided. So which is bought out accessories and supplied along with machinery value 2,500. So 2,500 will be added. So the total is 26,100. So with 3,15,000 plus 26,100, which will give you 3,41,100. So with this we will minus cash discount. So cash discount is percentage is given, which is 2% on the price of machinery. So what is the price of machinery here? 3,15,000. So into 2%, which will give you 6,300. 3,41,100 minus 6,300 will give us 3,34,800. So this is your total transaction value. So now here we will come to know this is a IGST, because the dealer in Hyderabad entered a contract with the supplier in Tumkur. So Hyderabad and Tumkur, where it is two different states, which is Karnataka and here Hyderabad. So as it is two different states, that is Hyderabad in Telangana and Tumkur in Karnataka. So IGST will be charged. So now as IGST is charged, it is only 1%. So what is the GST? 18%. So 18% will be charged on the transaction value. So the transaction value is 3,34,800 into 18% will give you 60,264. So now I hope you understood this problem. So the note is what I have explained. So you can read out the note which is given here. It is similar to what I have explained to composite supply and the mixed supply. So the difference why we are taking the principal rate will be explained in this note. So the next problem what we're going to discuss is, so this is computation of transaction value under mixed supply. So now we learned under composite supply how to find out whether it is mixed or composite. So now in this question we will find out whether it is mixed or composite. So a manufacturer has to supply machinery as following terms and conditions. Price of machinery net of taxes and duties, which is 2 lakh. Then Installation and erection expenses charged separately, invoice 13,000. Packing charges primary and secondary 2,000. Design and engineering, which is 15,000. Cost of material supplied by buyer at reduced cost, and actual price of the material is given. So we will always be taking the actual price to find out the transaction value. Next, pre-delivery inspection charge. Then we have rate of GST on machinery 18%. So now net of taxes and duties, in the sense it is excluding GST. So when we have net of taxes and duties, which states that the value of the asset is excluding GST or excluding taxes. So now as it is excluding taxes, we will be taking 2 lakh directly as the price of machinery. So next, all the expenses will be considered. We will add up installation 13,000, packing charges 2,000, design and engineering charges 15,000, cost of material supplied by buyer at reduced cost. So actual price will be taken, which is 12,500 instead of 2,500. Then pre-delivery inspection charges 1,500 will be taken. So what are the other expenses? So there are information which is given here as other information. Let us read out whether we can consider those expenses also. So in other information they have given cash discount of rupees 7,500 will be offered if full payment is received before dispatch of goods. The buyer has made the payment as per the conditions stipulated. So this discount is given when the full payment is received against the invoice. That is before the due date. So if it is as it is done, 7,500 will be considered. So this 7,500 will be considered as deduction. So the machine is supplied along with bought out accessories at rupees 4,250. I'm sorry, at rupees 4,250. So the machine is supplied, which is worth of 4,250. The accessories were optional, and the rate of duty applicable to the accessories is 28%. So here they are stating the accessory what is provided along with the machinery is optional. So it is not mandatory that you should buy. So this primary supply is not interrelated with the secondary supply. So what kind of supply is this? This is mixed supply. So when the goods are where various goods are rendered as a single supply is called as mixed supply. So when it comes to composite supply, to support the primary supply, the secondary supply is made. So when it is supporting activity, then it is composite supply. Here mixed supply is where various goods are supplied with one GST rate. So which supply has highest GST rate, that GST rate will be applicable. That is mixed supply. So there is no supporting feature in this as primary, secondary supporting the primary activities. Nothing like that under mixed supply. So here they have told the accessory which is supplied is optional. If you want, you can buy. It is not mandatory that you need to buy with the primary supply. So as it is optional, this is called as mixed supplies, because there's no way the accessory which is supplied is going to help out the primary supply of the machinery. As it is optional, this will be considered as mixed supply. So the accessories rate is 28%. The manufacturer incurred cost of rupees 750 in loading the machine and in the truck in his factory. So this is the expenses which is incurred by the manufacturer. It is not incurred by the seller or the buyer. So this manufacturing expenses will be in the initial stage itself, which will be included in the price of the machinery itself. So this expenses will not be recorded because this expenses will already be included in the price of machinery. Then we have these are not charged separately to the buyer. So these are, as it is clearly stated, these expenses will not be charged separately to the buyer. So find the transaction value and GST payable if the rate of GST on principal supply is 5%. So they have given here on principal supply the rate of GST is 5%, but here they have given rate of GST on machinery is 18%. So now the rate of GST on machinery is 18%, then the rate of GST on accessories is 28%. Then if they have given this line to confuse you, find the transaction value and GST payable if the rate of GST on principal supply is 5%. So this is only for your confusion. So you will understand that this is composite supply and you will use this rate. No, please be clear by reading the question. Only if the secondary supply is related to the primary supply, then it is composite supply. So now here the machinery, as this is mixed supply, the higher GST rate will be applicable. So here the principal supply which is made is machinery 18%. Then the optional supply which is made is accessories 28%. So whichever rate is higher you will be taking 18 or 28, or also 5 is also given here. So under this 3, whichever is higher will be taken. So 28% is higher, so that rate will be applicable. So now let us get into the calculation. Computation of transaction value and GST payable. Price of goods excluding GST, which is 2 lakh. Add installation expenses 13,000, packing charges 2,000, design and engineering 15,000, cost of material supplied by the buyer at the actual price will be taken, which is 12,500. So not the reduced value but the actual value. Because you can how did you get this 12,500? Read the question which states actual price of the material is 12,500. 12,500, pre-delivery inspection 1,500, so the total is 44,000. So now you next is we'll minus the less cash discount. So less cash discount, so I've explained the discount value is directly given, which is 7,500. So we will minus from the total, so 2,44,000 minus 7,500, you will be getting 2,36,500. So as this is the mixed supply, we will be adding up the uh, accessories which is bought, which is optional. So how much is the accessories which is bought is optional is 4,250. So add up 4,250. So the total will be transaction value is 2,40,750. So on this value we will add a GST. So in this they have not stated from which particular state is the goods being exchanged. So when it is not stated, we will always be considering CGST and SGST will be charged. So now here, with the total transaction value, the total GST rate is 28% because it is a mixed supply. So 28 divided by 2 will give us 14, 14 for state and 14 for central. So what is the total transaction value? 2,40,750. So 14% for state will give us 33,705, and for CGST 2,40,750 into 14% will give us 33,705. So the total GST payable is 67,410. So the note what is given here is the manufacturing cost of rupees 750 is already included in the selling price of machinery, as it is not charged separately and hence is not to be added again. Yes, I have explained this note. Then supply of more than one goods or services which are not naturally bundled together, that is bundled together, if it is optional, these are referred to as mixed supply of goods or services. So this implies that supply will be taxed only as a supply of those goods which are liable to the highest rate of GST. So that is, tax must be at the highest rate among all the other products supplied. In this case, optional accessories have highest rate than principal supply. So when such supply is made, you need to consider it as mixed supply. When any goods is supplied along with the primary as optional, please consider it to be mixed supply and the higher rate of GST will be applicable. So don't get confused when such supply is made, and don't get confused with the GST rate to be assigned. So now you will have a doubt, add bought out accessories which is optional. Why can't we add it with the along with the expenses which is to be added? You can add it along with the expenses which is incurred here, as well as add it after minusing the discount, so which will give you the same answer. So there is no problem in taking the accessory value along with the expenses as well, as we have calculated in the previous problems. So it is shown here because it is optional, so we are adding up after the discount value. So you can either way follow it, add up with these expenses, or you can add up after deducting discounts. So thank you everyone. The other problems will be discussed in the other upcoming videos.